This is the S&P 500 one-day reading for February 9th, 2023. It's currently January 5th, 2023, 11:18 p.m. Eastern Time. The overall theme and behavior, we have a brief high that's easily missed, followed by a decline through multiple support levels as the overall theme and behavior. Behavior on the highest high, there'll be a rally into the highest high that offers an opportunity to open up a short position. And not necessarily just on the scale of a one-day chart. Behavior around the lowest low, we have what's most likely a rally. Let's see here. It's mixed. There's like we meet a resistance level, or we rally into a resistance level, and then we decline from the resistance level into the low, it looks like. I'm advised to trade around a rally that offers an opportunity to open up a short position. So trade around the high here. Now, when we look at the 1 month, guys, it's very possible that we have our first lowest low here on the 9th, or maybe our second lowest low, because I did pick up on the possibility of it here as well. But there's a lowest low as far as the 1 month is concerned, in the midst of a notable decline that offers an opportunity to open up a long position. I didn't see any cross congruencies like I did the following day, but that doesn't necessarily mean that it's not there. There's a deep low. So behavior around in the pre-market, we have a trade opportunity probably right around the open. When we have this move higher in the pre-market through resistance, we stay above it briefly and then break back down through the same price level. That's the first day's high there, and there's a trade opportunity in there. Around the open, there's the halting of a bullish trend. It's a really brief peak, easily missed, and there's a halting of that bullish trend marked by a sharp decline through key support on the scale of a one-day chart. That decline in the first half hour is the decline in the first half hour or so ends with a fast sudden move higher around 10 o'clock, somewhere between 10 and 11, but closer to 10. When we meet a key resistance on the scale of like at least a one-day chart, but maybe more than a one-day chart, being that it's the Ace of Swords. From that resistance level, there's a notable move into that resistance. Fast sudden move higher into that resistance, and that ends that move into the resistance marks a trade opportunity around that move into resistance marks a trade opportunity. If there's enough price movement there in that 10 to 11 o'clock hour to the downside to reach our lowest low, and that decline into the lowest low offers the opportunity to open up a long position that you could close out of towards the end of the day. But the main trade that's on the scale, we're looking at a 1 month chart, but on the scale of a one-day chart, we're looking to open up a short position, which we could do there at the end of the day. So I would go from the Ace of Swords, the decline at that Ace of Swords. So we open lower, so likely this is an opportunity to open up a short position. You could close the short position at the day's low here, somewhere between 10 and 12, and also there would be an opportunity in the midst of that decline there to open up a long position, close that long position, probably around, it's in the mid-afternoon, but probably around like 1:45-ish, in the midst of a notable move higher. So there's a fake out or shakeout, intentional fake out or shakeout of some kind midday. Well, matter of fact, before we get there, there's 3 pokes through the same price level and a sharp decline. before noon, and a fake out or shakeout of some kind, some potential misdirection on the part of a technical chart. Looks like a decline, and then we turn around and we come back up to the upside with a big move higher that's unexpected between 1 and 2. And then that's a key resistance level that we rally into, from which point we decline with consecutively lower spikes up on the way down, and that decline takes us into the end of the day. End of the day decline right around the close offers an opportunity to open up a long position, possibly on a scale of like a 1 month kind of like the 1 month chart kind of scale, because we have a cross congruency here to the Ace of Cups. In any case, in the post market, we have 3 crisscrosses back and forth through the same price level, confirming a bullish trend. We do open lower, but again, there's an opportunity in decline to open up a long position. And that's the S&P 500 for February 9th, 2023. My friends, don't forget the rule of karma. Super important. It's how you keep this channel providing free content. It's how you keep the profits flowing to you. It's not so much about being right and wrong, guys. You could be wrong and still be lucky and make money. It sounds crazy, but when you trade, you understand what I mean. You could be right and lose money because life happens, right? So the way that you ensure abundance flows freely to you is by letting it flow freely through you. It continues to come to you because it's flowing through you. It's not stopped. You're not creating a block. So every time you get it, guys, every time you make a profit from the information, you should send 5% back to the channel here through the resources tab, PayPal or Cash App, and make sure you send 5% forward to somebody who needs it, doesn't expect it, my friends. That leaves you at 90%. Make sure you spend that 90% out of love. The universe is going to send it back to you tenfold in all directions, my friends. I'm very grateful to have you watch. And I'm very grateful to have you make money. I'm very grateful for you to share that with the rule of karma. And I'm very grateful to see you on the next one, my friends. I'll see you there.